Welcome into my InvestEngine portfolio update. I've managed somehow within my video schedule to miss a month, so we've probably got lots to talk about when we go into the portfolio itself. Just for now, let's have a quick recap of actually how the last month has gone in terms of the investing markets. I've covered this on my channel before, but the stock market has seen a little bit of a few bumps and we had a few big sell-offs, especially when we look at those big US stocks. If we actually take a look though and zoom out and have a look at what's been happening over in the last month, you can see when we look at the S&P 500, for example, it's actually been pretty flat. And, you know, you'd be looking at some of the news stories, you'd be thinking that we must be about 5, 6, 7% down. But if you look at it over a longer period of time, actually not a huge amount has happened. And then also, if we just zoom out a little bit wider, which I thought would be quite interesting and something we're going to touch on a little bit later, then if we actually zoom out and look at the market from a global perspective, we can see that we're actually in the positive for the last month, which I don't think a lot of people would have actually expected. And you've probably been having your hawk eyes on your investments, looking at them going in the red for some people, thinking, why the hell did you get started right now? Now, as always, there's a million and one reasons why the stock market does what the stock market wants to do and why different stocks are going up and why some of the big tech stocks have been going down. And you can point to whichever ones you want to suit your own narratives. There's always lots and lots of things going on at any one time, and lots of people are just trying to work out what that actually means for their investments in the long run. We've obviously got Trump over in the White House deciding on what and where and who to impose different tariffs on. Where they end up, no one knows, of course, at the moment. We've got the ongoing Russia and Ukraine conflict, and whether that gets resolved and how that gets resolved has caused lots of different political tensions over the past few days between the US and the European region. And one thing coming off the back of that, you may have noticed, been going on for a slightly bit longer, but you would have seen some of those defense stocks, especially over in Europe, have been having a bit of a bumper ride recently. Now, whether that continues over the next few years is another matter entirely, but that may be the next trend coming after AI. Could be going back to those boring big old defense stocks, which probably haven't been given much love very recently. Now, just before we jump into the portfolio itself, I did just see this story pop up over the weekend saying that the crypto market's been given a little bit of a pump, with Trump reinforcing that the US will have a crypto reserve and it will contain more than just Bitcoin, apparently. So I think this will be quite an interesting one to watch. So if you are into your crypto investing, even small amount on the sidelines, I'm sure you would have seen a lot of those smaller coins get a big old boost. Now, I wonder if he adds Trump and Melania coins to the US Strategic Reserve. Let's see what happens there. Anyway, let's jump into the portfolio itself and we'll see how I've actually got on this month and how well the investments are doing. I'll also just break down for the newer viewers, if you're brand new or you've been watching me just for a month or two now, actually what I invest in, the different accounts and the different investments I actually have in my InvestEngine portfolio. So as you can see, this is the main account. I'm actually logged in on the web platform here, but this is the same view as you get on the app itself. So you can see total value of all my investments is £53,553. £533, I should say. Now that's broken up into two main accounts. So the biggest account I have is my ISA, which is in Toby's world, as you can see here, falling under the ISA category. But then we scroll down as well, I'll also cover this. I do have a very small self-invested personal pension with InvestEngine 2 with a value of £3,697. If I just cover this one briefly first, you'll see it's getting quite interesting now. The longer I've been invested, all these little black dots on these graphs is where I've put money into the account. So every month, as many of you will know, I just invest the same amount of money, keep things super consistent. I do not spend any hour or any second of my day looking at the price of the stock market, trying to get it right or trying to guess when it's going to be low, because I believe nobody has that ability to be able to do that on any kind of reliable basis. And if they claim to, I'd be running very far away from them. The investment in this portfolio is super simple. It's a single index fund, a single global index fund, which is VWRP, as you can see down here. And I do have some more orders placed as money goes into this at the start of every single month. Also, don't forget with a self-invested personal pension, there is the ability to get tax relief too. So your basic tax relief gets claimed back through InvestEngine. Those rules, of course, can change. And at the moment, you get current certain amount of tax relief. And if you're a high rate taxpayer, you can claim that back from the government. Obviously, those rules could change at any point. Now, in terms of the ISA, let's go into this one because it's a little bit more interesting and we get lots more we can talk about. So if I go into my portfolio itself, Toby's world, let's have a look here. So we can actually break things down. Let me just go down to the month so we can see what's been happening. So you will see that the portfolio is slightly negative for that last month. And one interesting thing I actually wanted to show you is when we go through what it's invested in, where the performance hit has actually happened. So let me just scroll down here. So over the last month, as you can see, there are actually 2 ETFs here that are actually in the green by, quite not a bad margin over the past month. So developed Europe, excluding UK, and then the UK being the FTSE 100, which I've got represented here, have actually done okay for the last month. It's the rest of the market, effectively the emerging markets, the Japanese market, and then the US, which has let everything down over the past month. Now, a second point you might also be thinking here is, hang on, we just looked at the S&P 500 a minute ago and it wasn't down as much. Now, don't forget that these UK listed ETFs are all going to reflect the exchange rate difference with pounds and dollars too. So this does affect the value and the cost of your investments, as the exchange rate in the pound and dollar fluctuates over time throughout the month. The percentage you see might not be the percentage that you see. For example, if you just Google S&P 500, that's going to be the price index according at least to the dollar. So it's really important to make sure that you factor in the account, really the reality that we have to use pounds when we're investing from the UK. This sometimes works out well for us in a month, and it sometimes works out pretty poorly. Again, this is another thing I think it's not in our control, so I don't bother looking at it. And I just look at it from a very long-term perspective, that every time I invest, sometimes I'm going to get a very good exchange rate, other times I'm going to get a bad one. And, in retirement or whenever you wanted to use these investments and you had to sell, likewise, sometimes you might get a, not so good exchange rate, and sometimes you'll get a better one, so your investments will appear, more inflated than they otherwise would be. Now, the lesson I had noted down to talk about in this video was really just, I think, to reinforce that very important aspect of long-term investing, which is just diversification. Now, if my portfolio was, for example, just S&P 500, although in the long term, I have no doubt that things will probably be absolutely fine, it is a reminder that diversification outside of just the US market is quite an important thing. And for me, at least, I like to have a portfolio that invests globally all around the world. So although this portfolio isn't perfect, it does miss out smaller parts of the world. It doesn't take into account every single part. It does have most of the developed markets and some of the emerging markets nicely aligned. And I have to accept, and I hope that more people will accept, that they don't know the future. So from that baseline of saying, look, I don't know the future, I prefer to make sure that I just align all of my investments pretty much along their market weight, meaning that the bigger a company is, no matter where it's situated, the more of my money that goes into it. And I just do that consistently every single month. So I think that's an important lesson. It will come up more and more and more, but we know, for all we know, we may have a year where the S&P 500, for example, performs poorly, but actually the rest of the global market does pretty well. And as a long-term investor, I would rather benefit from that and make sure I just have some of my other bets on the rest of the world too. Because if you actually look back through history, you'll see that the US doesn't always outperform. And although it's had an amazing run, an amazing few great decades, there have been certain parts of time when we go back through time where international stocks have beaten US, for example, and it goes in different cycles. Where we are on those cycles and whether they return, I have absolutely no idea, and no one else does. And that, I think, is a fundamental reason why it's really, really important to go back to diversifying your portfolio, whatever stage of life you're at. Now, on that note, if you do want to get started with InvestEngine, don't forget that if you do sign up, deposit at least £100 into your account, you can get a cash bonus of up to £100. Also, I'll leave a link as well to my different portfolios that I do have shared here if you want to have a look and prod around. Now, although those links will be in the description of the video, I've been looking at the back end of my YouTube analytics, and loads more people now are watching me on TV. So as I'm editing this video, I'll also put up a QR code. Now, if you want to scan that, that will take you through to the InvestEngine website where you can get yourself set up with an account. And also, as a complete side note, if you want to use the promo code Toby when you set up your account, and you actually put that promo code in the profile section once you finish setting up all of your account, and that's when you can make sure you get yourself a bonus. That link is an affiliate link, so every time someone does use it, I do receive a small commission, so thank you to the people that do that. It does help support the channel and keep things going. On that note, it is quite weird to imagine my big fat head on someone's 50 or 65-inch TV, and I also bet there's probably someone using that like a 98-inch or 100-inch TV right now watching this video, which is very, very odd. So if I came by your house, my face would probably be about 4 times the size. Anyway, that's a bit of a weird picture to imagine. And one day I do imagine when I'm going out on a, like a training run in the evening, to look through someone's front window and see my big fat head on their 100-inch TV. maybe that will happen one day, who knows. Now, a second point I wanted to cover in this portfolio update, and really this has come from the last video I did when I spoke about, I said a stock market crash isn't really such a bad thing, and actually we should welcome it. And now, especially if you're a newer investor, which is normally the opposite thing that you think. If you're a newer investor, you're always worried about, oh, what if I'm starting to invest during a stock market crash? But in that video, I go through lots of the reasons why you shouldn't worry about that. And actually, I think it's a great time to invest, just as it is basically any time. Now, one of the things I wanted to pick up on, it really comes down to the psychology of investing. So, for example, when I look at my account and I see, nice green number for returns, it does give you that kind of warm feeling and make you think, oh, investing is the right thing to do. But this is really just a number on paper. It doesn't mean anything. Although it shouldn't mean anything, I can imagine that lots of people, when they see their investments in the green, feel great about themselves and they feel like they're doing the right thing. But really, this amount and this value shouldn't really change anything. And I think the biggest kind of analogy I can think of when I compare it to is thinking about if you're a homeowner and someone coming and knocking on your door every single day, giving you a value for your house. One day they come and say your house is worth £500,000. One day they say, oh, your house is worth £1 million. And then another day they come round and say, oh, sorry, I can only give you £150,000 for your house today. Now, how would that make you feel? You'd probably be all over the place. You'd be happy one moment and sad the other. But then really, when you think about it, well, you weren't going to sell your house anyway. So what does it matter? And I think this comes back to some of the things when you have to, get in your head about stock market investing. Whether that number was green or whether this number is red, it shouldn't affect the way you behave and the way you invest and live your life. And I think there's a danger that you can change your behaviors depending on what you see. For example, I bet during the dot-com bubble, there were loads of people swanning around saying, oh my God, I'm a stock market millionaire. Look at me. I've got this huge balance in my investing portfolio. But I bet those same people just a year later basically had almost nothing in their stock market investing portfolios, whereas they had, $1 million of Amazon stock, which ended up crashing more than 90% at some point. Those gains, which people would call them unrealized, shouldn't affect the way you invest. And it is quite interesting how it plays on our psychology. When we see green, we think good, and we see red, we think bad. In reality, we should just really not care either way. But these are always things which are easier said than done. But I just did want to point that out because lots of people will get scared when markets pull back, and they'll also get very excited when markets go up. There's no surprise that Google searches for getting started investing happen during big bull markets. When stock market's crashing, no one's thinking about starting to invest, when actually in hindsight, it would have been some of the best times to get started investing. Anyway, if you do want a bit more information on that one, you can go back to that latest video I did about the stock market crash. But just an interesting thought, and I'd love to get your opinion in the comments below as well on that investing psychology, because as a long-term investor, I genuinely do not care what this number says. It's not in my power, not in my control. But what is in my control are all these little black dots of making sure that every single month I have that consistency that invests what I can afford into, tax advantage accounts like ISAs and SIPs. And really, that's all you can control. You can't control how good the market's going to be for your investing timeline, whether that's 10, 20, 30, 40 years, or for the rest of your life. But do let me know in the comment section below what you think about that, and I'd be very interested to hear your thoughts. Anyway, I will see you in the next video. As always, happy investing.